Okay, hello and good morning everyone. Welcome to JFD Brokers Traders Espresso with me, Darius Anucauskas. Today is the 7th of November 2018. So, welcome everyone. Welcome to this middle trading day of this week, or in other words, as people know it, Wednesday. But we're going to have a look at a few charts, see how they're performing, how these instruments are performing. But before we start looking at those, before we start looking at the charts, as always, we need to quickly have a read through our risk disclaimer. So, the content we produce does not constitute an investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest and we can continue. Okay, so now then, let's jump into the charts. Now the first one I want to touch on, guys, is one of the indices here, one of the popular ones, and that's Shanghai Composite. Now looking at this chart, looking at this daily chart, of course, you can see that we're still trading above this long-term downside resistance line taken from the peak of the 29th of January, and in a way, as you can see, it's kind of struggling to kind of drop below this. So this certainly, of course, could be a good sign for the bulls, because as long as it kind of remains here above this downside resistance line, we could kind of in a way class this as a nice bouncing ground for a potential move higher. That said, of course, for us to get comfortable with the upside, we would need to see a nice good break here above this level around here, around the 2677 zone, something like that. It also coincides here with this 50 EMA here, shown as the red line on the daily chart. So in a way, this is something that we're going to be keeping an eye on, because as you can see, it kind of proves to be quite an important one, quite an important level that keeps kind of holding the price down. And like I said, for now, the index is kind of stuck here between this 2677 and this downside resistance line. So in a way, if of course we see that break here, and eventually maybe a close on the daily candle here above this 2677, this could potentially open the path towards higher levels like the 2773, or even going higher here towards the 2825 zone, which was marked here by the highs, well, near the highs actually of the 26th of September. So for now, guys, keep your eyes on that one. Certainly if these two don't hold, I mean, we could continue pushing higher here towards this 200 EMA here, but of course, let's not get ahead of ourselves too much, and let's see what he wants to do first with this 2677 zone. On the downside, if this suddenly, let's say, drops below this downside resistance line, now what you should also kind of keep in mind here and keep monitoring from the very short-term perspective. I mean, like I said, if this drops here below this, still it wouldn't mean that, you know, that's it for the bulls. I mean, the game's over and now the bears are going to be in control. No, of course you should keep an eye on this little tentative upside support line as well. I mean, this could potentially hold and push the index back above this long-term downside resistance line. So in a way, we could see something like this happening. But if even this gets broken, this is the area where we are going to kind of probably stay neutral, very neutral, because even though it could be the momentum could be more to the downside, still for better confirmation for us, we would need to get a nice good break here below the 2525 zone marked by the lows of the 30th of October. Now only then we could then target much lower levels, especially the lows of October here, to be more specific, the 19th of October, where we could then target this area here at around 2450 zone. So keep your eyes on that one. Keep your eyes on this potential, or should I say, keep your head keep this potential idea in your head, guys. So, and watch it carefully, because like I said, we're very close here to both of these levels. On the upside, this potential breaking zone here on the upside around 2677, and on the downside here, we're also not far from these quite important lines here. So Looking at silver, one of the precious metals, so in a way it seemed that silver wants to continue pushing higher here last week, especially looking at Friday. It had a nice run here towards the upside, managed to reach the 14.911 level here, marked by the highs of the 2nd of October, but as you can see, it quickly retraced back down. So now it's kind of holding on to this. Initially I drawn this as a bit of a tentative one, as a tentative upside support line, just to kind of but eventually, as you can see, it kind of, to be honest, it's kind of playing out nicely here. It continues to act as an important line to watch here. So what we're going to keep an eye on here is we're going to keep an eye on this level here in this potential breakout area. If of course this commodity wants to continue driving lower, if we get a nice break here below this tentative upside support line and then eventually close below the 1450, of course this could put this more on the bearish side, but again, for better confirmation, we would probably now need to wait until this would could drop below the 14.213 area, something like that, approximately. You can just round it up maybe towards the 14.21. So in a way, this could become our area that we're going to be keeping an eye on, just because that even if it's going to drop here below this short-term upside support line, this could actually rebound back up from this 1421 zone, and in a way form a nice range here. And as we know that well, precious metals kind of like to form ranges here occasionally. So yep, I mean, guys, for now, of course, keep your eyes on this one, keep your eyes on this short-term upside support line, and like I said, a nice good break below that doesn't really mean that we're going to continue falling lower, because like I said, it could get held here around this 14.21 zone, from which it could bounce back up, and in this way we could potentially form a range. So let me just actually highlight this for our future reference. So this is what we're going to be keeping an eye on, and there we go. So in a way, very nice good range could be formed if, like I said, this breaks here, the upside support line breaks, and it rebounds from this 14.21. If it breaks, if this level breaks, that's no doubt we could potentially see this one traveling lower here towards the lowest point of September, which was near the 13.95 zone. So keep your eyes on that one, keep your eyes on these scenarios here. On the upside, we're still keeping an eye on the 14.911. A nice good break above that could send this commodity to test the psychological 15 level, just slightly above that, and if that doesn't hold, well, it could be opening the path towards much higher levels. So, but we'll get to that point if we get closer to this level here, the upper side here, this key resistance area. Now jumping into one of the cryptos. Now I haven't looked at cryptos for quite a while now, and to be honest, you probably understand why, because it's a bit of a drag lately, has been a bit of a drag lately. But looking at this, looking at Ripple, and as you can see, we're still kind of holding on above this this downside resistance line, this long-term downside resistance line taken from the 10th of February. Certainly now there is a bunch of levels that probably need to be removed here, guys. So it's let me just quickly do that for you now. Certainly, like I said, we saw this nice push here, especially yesterday. Looking at this daily chart, this crypto managed to get back above this 200 EMA here, shown as the black line. Certainly, that's something more. It's leaning more to the positive side, but for us to probably get comfortable with higher levels, again examining higher levels, we need to see a nice good break above this key resistance area at around 0.6260. Now this way we could then target the this 0.7060 area, or even going up here towards this little fella here, and that was the peak of the spike that we saw here in September, and to be more precise, on the 21st of September. So, and that's approximately around this 0.7910 zone. certainly you need to keep in mind that different brokers kind of have different slightly prices on these. So yeah guys, you kind of have a look at your platforms where you're trading, but like I said, yeah, this, keep an eye on this little spike here, this peak of the spike. Yep, we could see, like I said, further acceleration to the upside, but only if we get a nice break here above this key area of resistance that I've got here, marked by the highs of the 22nd of September and also the 30th of September. So keep your eyes on down. On the downside, for us to start looking at much lower levels, we would need to get a nice drop here below this low here at around 0.3740 mark. Now this area here, this low was marked, this level is kind of marked by the low of the 12th of October. So in a way, this could potentially open the path towards slightly lower levels. The only thing is that we should still keep an eye on this. Keep an eye on this downside resistance line here, and it could potentially kind of be the area to watch as well. So in a way, there are some good levels, and especially this here, this level here at around 0.2465. As you can see, it acts as a very strong area of support here, especially in August and in September. So in both of these 2 months, the crypto was not able to break below that. So in a way, this kind of shows the significance of the level. So but we'll consider that area only if we get a nice good break here below the 0.3740 area on my platform here. So yep, keep your eyes on down, guys. But for now certainly we're somewhat bullish on this one, just because, like I said, looking at this daily chart, we managed to get above the 200 EMA again. Of course, I understand that it could drop back down again, but nevertheless, like I said, that's why I'm saying that it's somewhat more bullish than bearish. Jumping into a few pairs now quickly. The euro dollar. Now the euro dollar is having a very nice time here. Now let me just kind of quickly point out something, guys, for you here, and probably for this one let me jump into a 4-hour chart. Now then, certainly we did have this downside resistance line that got broken nicely, and it was tested then from above, and it acted as a very nice area for a bounce here, and from which kind of the euro dollar pushed higher. So but what I wanted to also show you guys as well is this little formation that kind of that I kind of skipped. We had this one on our strategic report, but I kind of skipped this on my videos, but I just wanted to quickly show you. Now this what I'm trying to draw here very quickly is a falling wedge formation, and certainly, as you probably know, the textbooks state that normally we get a nice break here to the upside if we see a formation like this. To be honest, at the moment we're seeing exactly something like that. We're getting a nice pop here. The only problem is that the pair is kind of getting held here by this 114.55 zone. Let me just adjust it quickly. So it's kind of getting held here by that level, and we're going to continue monitoring it. But we're still more bullish than bearish on this one from the very short-term perspective, of course, guys, because looking at the overall picture here, you can see we're still below this downside resistance line. Let me just kind of draw this on this medium-term downside resistance line right here. So in a way, this could play out as the area which could hold the pair down, if of course we see this continuation here in a move higher. Now, for a better confirmation of the upside here, guys, we need to see this nice good break above the 114.55, which could open the path towards the 200 EMA here, or even just slightly above that, the 114.95 zone. So and of course, if that doesn't hold, well, guess what, we could continue traveling higher here, potentially aiming for the 115.50 or even the 115.75 zones. So keep your eyes on that one. Certainly if the buying momentum is going to continue being strong. We could see this one traveling all the way towards this downside, medium-term downside resistance line. But to be honest, let's not get ahead of ourselves too much, and let's see how this performs around this 114.55 today. If we get a nice pop here to the upside, yep, keep your eyes on these slightly higher levels that I was just talking about, especially the 114.95, which acted as a very nice area of resistance on the 23rd of October. On the downside, for us to get comfortable with examining lower levels here again, we would need to see a nice good drop below this area right here at around 113.90 zone. So because also if we get a nice drop below this could potentially place the pair below this short-term tentative upside support line, and we could see this one traveling further down here, potentially towards the 113.55 or even lower. So maybe even going back all the way here towards the this in a way now becoming a psychological 113 zone. So keep your eyes on down, keep your eyes on this. Let me just kind of put quickly an arrow here just for our future reference. So yep, something like this could be possible. So basically this becomes our breaking point for the downside. Let me just quickly mark that, and oh, removed it actually, so there we go. And on the upside, the 114.55, we're going to keep a close eye on that one as well. And jumping into last pair, and that's USDJPY. Excuse me, guys. So seeing a bit of weakness here. Certainly the dollar is kind of getting hit a little bit here, and the uncertainty is rising. So yep, we can see the yen buying kicking in again. Now this line, we can get rid of that one. So basically what we're going to keep an eye on here is from the very short-term perspective, we're going to keep an eye on this area here, this potential support zone here at around oh, excuse me, guys. I mean, something's going down with my voice. So we're going to keep an eye on this 113.0.05 area. A nice good break below that could potentially open the path towards much lower levels. Now, the area that we're going to keep a close eye on here is the 112.50 area, something like that. But if that doesn't hold, this could continue traveling further down. So, of course, for now, just kind of we're going to be very cautious on this one because it is a bit of a tricky market, as you probably are aware. The midterm elections were taking place yesterday, and so yep, we could see some activity here today in this pair as well. So be very cautious. So on the downside here, keep an eye on the 113.05 area. Nice good break below that could open the path towards lower levels here, at least towards the 112.50. And on the upside, we need to see a nice good break, a nice good pop above this 113.80 zone approximately there, which could open the path towards this slightly above that, the 113.95, or even actually better, going all the way here towards the 114.20 zone, which was marked here by the inside intraday swing low here of the 4th of October. So let me just quickly put an arrow here, and this is where we're going to target if we get a nice pop here above the 113.80 zone. So keep your eyes on these levels, guys. Thank you very much for watching and listening. I really hope you found it useful, and I do apologize for running a bit over my time, but nevertheless, if you want to join me later on today at my Traders Tea Time, and that's 13:15 GMT, 14:15 British Summer Time. But for now, thank you very much, and bye bye.